Good morning, everybody. Welcome to week 41 of the weekly financial roundtable. We have Michelle back joining us today. We have our special guest, Nick Secord. We'll get to him in a minute. And so, yes, please use the chat. The chat is great. We love to hear from you. Comments, questions, stream of consciousness. I don't care. Remember, money isn't the most important thing in life, but it is reasonably close to oxygen on the gotta have it scale, which is why we're together today. As we navigate in good times or bad, there's always opportunity for greater money-related habits, ideas, collaboration. And the purpose of this whole roundtable is to address the financial-related issues and opportunities for pro-beauty in a very proactive way. I love this visual. I think it embodies a lot of what we stand for at Qnity is how can we move from the left to the right? How can we go from a state of confusion, overwhelm? Gosh, I remember, and Nick, we'll turn you on the mic later, but perfect example is I remember last March and April, what a state of confusion we were in with like PPP. Do you remember being on the edge with that and all the decisions we all were making? So anyway, fast forward to today, we all survived the last year. Business is coming back. I was on with a client yesterday and they were just giddy. They had their best March in like a decade. So no more of this 30 down, 25 down, 20 down, 10 down. It's like they're growing. And I think a lot of it has to do with staying very connected to the financial side of the business. I don't know why I keep this picture of Michelle because it's the most awkward. It's not very flattering to me, but it does signify a big message that a lot of members of our brain trust have shared is that there's a lot of silver linings out there. I'm an unapologetic optimist, but I'm also a realist. And I think a year ago, we were very real about what was happening and we needed to hunker down. So we've had some great shares from our brain trust and a lot of silver linings, amazing ideas. Here's our brain trust. I think we've got to add Robert to this list now. Nick, we will add you to the wall of fame. And for those of you that haven't been part of our brain trust and feel like you want to either be live on camera part of our brain trust, or if you want to do it, submit and by email, we're happy either way. So feel free to throw your hat in the ring. We love contributors. Past recordings of these roundtables are stored in the Plan for Profits portal, where our Plan for Profits financial literacy course for small businesses lives. And last week is a recording that is worth listening to. Robert Cromings last week. Michelle and I had the very same interaction last week. I remember saying to somebody, it might even been my wife, and said, I've been doing 40 of these sessions. And the one we did this week, which was last week, the one with this guy, Robert Cromings, is the one I've got to listen to because I felt like I had my seatbelt on and I was just sitting back laughing a good chunk of the way, but also being very impressed and he just had so many great ideas and thoughts. And so anyway, that is stored in the Plan for Profits portal. You can reach out to Michelle on that in the chat. Now, we look at this gentleman here, and he describes his method of fashion as being pirate savvy. Nick, I would not necessarily describe you as having a pirate savvy look. And something also that's interesting about Robert is Robert, I believe his quote was that he's an accountant at heart. Nick's an accountant by profession. All right. So anyway, interesting distinction. Now, there is, I've got this image here, and for some reason it went all black and white on me. It was colored colored image before we put it on here. But anyway, 2 to 10, we have officially signed the contracts at the Waldorf in Chicago. This is going to be an in-person event. You do need to have at least 2 locations to be part of 2 to 10. I've mentioned this for several weeks here and I'll continue. We have not actually opened up enrollment, but we are keeping a list of people that are interested in this. And I know several of you has sent a level of interest. We're keeping track of that. And so stay tuned for more about the 2 to 10 project. I cannot tell you how excited I am to be with people again in an environment. I'm getting so excited about this gathering, and I know so many of you are too, that it's worth mentioning every single week. If you are not multi-location, if you don't meet the requirement of having 2 locations, that doesn't mean that during these roundtables, we're gonna go through our learnings that come out of 2 to 10, and we'll be generous in what we share with you. Now, this is actually my segue into Nick also. So this particular photograph was taken at a previous 2 to 10 conference, and by Scott Miller, who I don't know if you know Scott Miller out in New York. Great guy, him and Helen, they've been part of 2 to 10 for years, and he's a bit of a shutterbug, and he took this picture in Chicago one year at 2 to 10. And I thought, that's a great picture. Let's feature from our community. So anyway, but that's not why I bring this up. Nick, if we look at the name in the bottom left-hand corner, it's Scott Miller. And Scott is the one that came up to me, Nick, when you hosted you were my guest at one of as a conversation starter at 2 to 10 in the finance room. Do you remember that? Scott's the one that looked across the room, and I think we must have had 25 people, and he looked across the room at you, a complete stranger, and said he loves you. And he loved you because of you saved him money in taxes. All right. And he was very happy. So anyway, Nick, glad you're with us today. How are you?
Good, thank you.
Let me give a little bit of a description of you, Nick. So you have a practice that specializes in the numbers part of the business, which really means accounting, tax, as it relates specifically to salons. And you also do bookkeeping. We've done a lot of collaboration. You've done a lot of great work. We know you're very passionate about helping businesses, and you're really, in a way, a lot of people misunderstand what they're getting from their financial professional and aren't able to distinguish between certain skill levels. One of the things I like about you, Nick, is that you're like a triple threat. You're able to provide the necessary bookkeeping. I know you work with 2 to 10 salons. You also can be sort of a part-time controller, so you can step back, look at the big picture, and you understand taxes. So anyway, a lot of times you only get one of the 3, which is why you're busy, you're helping people. So you're based in Florida. Tell us a little bit about you personally.
Sure, absolutely. So I'm from St. Pete, Florida. Recently moved my office down to Sarasota, Florida, next to all the sunny beaches. So if anyone wants to come down and have fun at the beaches, that's where I live. The name of my company is Salon Numbers. I changed the name about 3 years ago. Started working in accounting in the salon industry exclusively in 2010. And it was originally called Salon Performance Group because I look at the numbers as a way to measure and enhance performance in the salon. And then I said, hey, let's get fun and call it Salon Numbers. And that literally truly defines and kind of describes what I do and my passion. So and like Tom said, I think even more right now, it's very important to understand the benchmarks, the financials, your managerial accounting, your tax returns, your payroll tax returns, your payroll, and everything, and then everything in between. Right now, they're all literally, because of Congress and the rules, everything is touching one another. And it's very important to make sure that you've got that interplay correct and you're doing and taking the very best steps in the right order.
All right,
So,
perfect. Yeah. And we're going to get into a little bit into the weeds today, guys, and it'll be a shorter session today. My guess is we'll wrap up probably like 40 minutes after the hour. Nick, you and I had a great conversation yesterday, and there's a few things that drive both of us crazy. I'll get to that later. To start with, give us what's going on with the government. I mean, what do small businesses need to know right now in terms of relief? I mean, most of the participants on this call are pretty savvy, all right? But still, it's hard to keep track of all this stuff. So do you think it's worth giving a brief update on what's going on with tax credits and all of that?
Sure. And I think that would be valuable. I think for some people, this will be literally a reminder. Some people, it'll be another reminder to get in touch with your accounting or tax or payroll professional provider, because a lot of this stuff is not going to be unlike the PPP, where you kind of could almost go online, fill out the forms yourself, and the banker kind of acted as that compliance officer to make sure you had everything correctly, as everyone has now been through hopefully multiple PPP applications, right? it was you, your bank, your officer, whoever you're using, and you were able to get that the SBA PPP loan and come back and then spend the money. And then some people have put in their forgiveness for the first loan. Some people haven't yet. But literally, I mean, I'm part of multiple CPA groups and people that are specifically related to COVID relief with tax attorneys, CPAs, EAs, bookkeepers. And like even the IRS just came out on April 2nd. So we're talking 5 days ago, exactly the rules and regulations around how you can apply for the ERTC in first quarter. So like, even as a practitioner, we're literally hanging on what the IRS is saying, the SBA is saying, and then turning around saying, how can we help our clients and the salons maximize that opportunity that they have? So yeah, I mean, so I kind of put it in a 10-step formula. I had to step back because I was always trying to make sure we were hitting each one of the 10 steps when I was sitting down to talk to either a potential salon or one of my own salons that I work with already is 10 steps. And I'm going to kind of go through this because it does give it a little bit of more of a succinct, check down list. Obviously step one was apply for the PPP1. Now, obviously, most salons applied for PPP1. They've spent the money. They spent the money last year. They have either applied for forgiveness or not. Step two is applying for the PPP2. As we all know, that took 25% reduction in sales to be able to qualify in any one quarter. And most people had that because of the shutdowns. And they've now applied for PPP2. That's step two. Step three would be eventually we need to file for that PPP1 forgiveness, right? A lot of people have done or have a strategic plan why they have not yet. This fourth step would be PPP2 forgiveness. And again, we have to spend through the monies. And for some salons, we're starting to get to the point because they released those a couple months ago where we're starting to spend through a lot of the monies that we have. And to be honest with you, a lot of salons, depending on where you are in the country and how you were able to open up or not open up, have either been able to kind of bank some of that money in savings or starting to spend through it to make sure they're staying in line with the compliance for PPP forgiveness. The fifth step here would be the taxation portion, the income tax portion of the PPP1. Remember, kind of it was an early Christmas present or late Christmas present back on December 27th. They signed a law saying that your PPP deductions would, the PPP forgiveness would be tax deductible. So before it was going to, the IRS said, we're going to tax you, everything you spend, everything you got deducted would not be allowed a deduction. And again, that was back on December 27th. They said, actually, we're going to allow that. So making sure that your income tax return for 2020 for your business is properly filed with the right amount of taxation on your PPP1 forgiveness. And one thing about this, if you haven't already filed for forgiveness, the law says that you're allowed to take those deductions if you reasonably expect to be forgiven of the PPP1's funds. So there's a little bit of estimate or gray area there. The next step would be PPP taxation. Now, this is something that won't really happen until we start looking at income tax returns in early 2022 for this year. So this is a little bit off in the distance, but it's still something that you want to have on a check down list here. The next thing is the payroll tax credit or the ERC or the ERTC. I remember before when they launched the PPP or ERC back in March of last year, you could either pick one or the other. I think most salons now know, hey, I'm eligible for both PPP last year and the ERTC. And then how was that interplay between PPP1, PPP forgiveness, and calculating the maximum $5,000 per employee payroll tax credit that ends up on your payroll tax returns? How is that calculated and how can I get the most amount of money from that? That also brings into the next step, which is the payroll tax credit or ERTC2, or basically the 2021 edition. And originally it was only for the first half of this year, which is what they just gave on April 2nd as the actual rules to get it. But they've also extended it, and a lot of people don't know this, they've all extended all the way to the end of 2021. So we now have all 4 quarters to apply this ERTC thing. So if you ended up in a salon where you're not returning as fast as you would like, or you're getting there, as long as you're at this point at least down 20%, more than 20% compared to your 2019 numbers for each one of, basically there's a special rule for first quarter 2021, but basically you're going to be able to have potentially PPP funds and ERTC funds for all 4 quarters this year. So there's definitely some special, I don't want to get into the weeds, but from a checkpoint list, this isn't just the first quarter of this year or second quarter. It actually goes all the way through Christmas, through the end of the year this year. Go ahead, Tom.
All right, on that one right there, so you have this list here, and I think you have a couple more items. Is this the
Yeah.
one area where you feel that there's the least amount of awareness out of your list so far? Is it the ERTC? And I want to make sure we keep it moving here because we got some other things to cover.
Yeah, I think that it's the thing that the IRS is changing. Normally as a tax practitioner or someone doing payroll, we have the rules, we know what the law is, we go do the law. The problem is we don't normally get weekly updates from the IRS on how to do that. And that's exactly what's been unfolding this whole year. So either your CPA or payroll provider firm is trying to keep up with the rules, or they just don't have the resources to stay on top of how it benefits you right now, right? And so I think it's the thing that's it's changing the most, and it also has the most opportunity, because I'm almost looking at it as a PPP3. You've gotten a PPP1, maybe got a PPP2. The amount of money wrapped up in this is almost as big or could be bigger than your PPP1 or 2. I almost calling it PPP3 as a way to kind of think of it. It's a third huge chunk.
Yeah, that's what I like to do is hit people over the head, and let's hit people over the head with that one. I mean, that's a big one. Okay. What else do you have on your list? Because I've got some chats I want to make. Are you on point number 8, or where are we at?
Yeah, I got 9 and 10, and they're both related to each other. Because to get at the monies in this ERTC for both 2020 and 2021, it specifically has to have an amended or a Form 7200 or an amended 941, which is a payroll tax return. But because you took a credit, you're going to be offsetting your income tax return. So you can't file your income tax returns for 2020 in this case if you haven't already applied for the payroll tax credit. Your income tax return is dependent on your payroll taxes paid. Your payroll taxes paid are what's getting amended or changed. So there's multiple, again, when I said earlier, you got to know the components and then do them in the right steps. Otherwise, you're going to be falling over yourself and have to file additional amendments for no reason. Again, this is why it's important to, as a reminder, make sure you're in sync with whoever's your payroll provider, your tax professional, and obviously all this obviously has to do with cash flow and actual money in the bank. So that's basically the 10-point list as it stands right now.
All right. So the ERTC one to me is the biggest area right now. April McDaniel. April, I was going to give you a shout out because April is a colleague of yours, not in the same company, but she's another part of the country. She does something very similar to you, and
Awesome.
It helps many people on this call. So April, thanks for joining us today. I know that you do a lot of this stuff and you help a lot of people, including Robert Croming. So there was a question from Ashley, okay? And let's address these questions and then get on to some other things. SBA sent out an email yesterday about additional funding for the EIDL loan that can be applied for. Can you speak on the info? And I saw that come out yesterday too. So speak to that, please.
Yeah, exactly. A lot of salons forwarded me the email and said, what do you think? I mean, really, we've got to remember, and again, this is something that maybe was kind of overlooked and the SBA is circled back. But remember, when you took the EIDL loan, there was covenant requirements on that loan. For instance, one of the biggest one that's the most impactful is you couldn't take shareholder distributions. Why? Well, because that would be liquidating the collateral, aka cash, that they had just lent you. So to have an EIDL loan, while it might be at 3.75%, and they were delaying the first payment for a year, it's a very affordable way to get financing and help your financing function and cash flow. It did put requirements on some of the best tax advantaged ways to pay yourself as an owner, as an example. So if I'm almost disappointed. This is just my overall opinion. Unless you need the money, I wouldn't get any more involved in an EIDL loan because of the restrictions it puts on your ability to really maximize owner compensation, distributions, and the tax benefits that go along with that, or the maximization of tax benefits. So I mean, do you need to get more in debt? A lot of salons I talk to, they're like, yeah, I could maybe think about, well, remember, you can't pay off debt, you can't expand. There's a lot of things you can't do when you have EIDL money.
And is part of this due to filing of a lien?
What do you mean by that?
The
I mean,
filing.
Yeah, I mean, it's yeah. I mean, I'm not gonna be a lawyer here, but yeah, there's UCC code. I mean, it's a typical loan. It's a loan. It's an SBA loan. Just like a lot of salons will do another expansion or get another location with an SBA loan. You know what I mean? So, yes, they're opening up for some people. Some parts of our country, they're just getting back to cutting hair. I was, talking to someone way up north, actually in Canada, and they got shut back down again in Toronto. It's like, geez Louise. So it depends on, you might need that money. That'll be a very affordable way to finance cash. Cash is king, right?
Yeah.
But if you're not in a cash strapped position, I don't know that I would jump on more EIDL money.
Yeah,
my opinion.
I think it's sound advice, Nick. And the point I was getting to is I believe that as part of an idle loan, there's a security interest that is filed on the company's assets.
Mhm.
That alone might be something worth considering, because in certain cases, no harm, no foul. I take the money out and I don't use it, I pay it back.
Right.
But they do file a lien and they will record the lien, which means if you
Right.
try to get other financing from someone else, if you're trying to, could affect your land. So it has a domino effect. I just wanted to put, it's a non-tax, but it's more of a legal thing. So.
Right. There's a lot of covenants requirements around it. Exactly. That's correct. Yes. It isn't just really low financing. There's other strings attached. The government gives and the government takes back.
Okay. Got it. All right. So it's a golden nugget. Yes, Amanda, it is a golden nugget. And we're looking for golden nuggets, Nick. All right. Golden nuggets. So speaking of golden nuggets, tax is an area that I want to get to next. And, I started out my first 13 years of my career being very deep into taxation. And there's a lot of things as it relates to tax you just don't forget. And there's a lot that I still remember, but I'm not an active tax practitioner. And you are an active tax practitioner. And if you were to outline, and we'll keep this time tight here, more bullet point, what are some of the things that are commonly overlooked tax advantages that salons in particular might miss?
Fair. Let me step back for a second to kind of see how to share with you how I kind of frame it in my mind. When I work with a salon, I feel like the last frontier that doesn't get explored almost is the tax aspect. We understand revenue, staff, we understand expenses, benchmarking, and we can get to some of that later. And then we have something left over. And then that last thing is how do I pay my taxes? What's the best way to pay taxes? Why am I paying so much in taxes? And normally you have a tax practitioner, whoever that might be, and you normally hire them from tax preparation. That's it's a compliance function. You have to file your taxes. And that means putting the right numbers in the right boxes on the right forms and filing by the right days so you stay out of trouble, right? You don't raise red flags, and you're doing a great job. That is completely different than proactive tax planning. And I kind of frame it this way. When was the last time that your tax professional came to you and said, hey, salon owner, I have an idea that I think will save you, big time in taxes. And when I ask people that, they consistently say, never, or 5 years ago or whatever. This is the time you really want to be in tune with whoever is your tax professional, because you're generally just leaving money on the table. That's it. And it's not about doing it wrong or right. It's just that you're not exploring all the possibilities that are normal in the salon world specifically to do it. So that kind of rolls into your question here is, what are some of the things? Some of the biggest areas that I consistently see is how the owner gets paid, whether you're behind the chair or you're not behind the chair, you've got multi-locations or not. There's still normally a lot of taxes that are being overpaid with how you're paying your overall owner comp package, between fringe benefits, distributions, reasonable compensation. There's, based on if you're behind the chair or not behind the chair. And a lot of that has to do with just really understanding the way you, the owner, interact in your business and what's the economic and mathematical best IRS approved way to get paid, and pay the least amount of taxes. Also, I think people generally are okay with paying their fair share of taxes. They just are not looking to try to pay extra on purpose. So that'd be one thing as owner comp. The second thing is just there are normal deductions that are allowed to all businesses. Obviously, the salon business has their additional carve-outs and how they operate that are generally not being taken. And this could go in the area of IRS accountable plans. It has to do sometimes with health insurance plans and the way that those are being taxed or deducted from payroll. So I would say benefits, I would say owner comp, I would say things regarding with rent, meetings. Those are just categorically some of the things that we see consistently that are normally not being taken advantage of. And again, because your tax practitioner isn't there to give you advice, they're there to make sure you're compliant. Does that make sense?
Yeah. In April McDaniel has given you a high five, and if she wouldn't have put something in the chat box, April would have called you out, because yes, it's music to the tax professionals' ears to hear it be spoken, that you do need to have that tax planning as part of the process. And the thing about tax is, you're right, Nick, it doesn't get discussed very often, but the numbers are staggering. For example, what's going on with capital gain taxes right now? They could dramatically change, which could be an incentive to accelerate a transaction in 2021 as opposed to the future. And I notice a lot in transition work that the tax dollars, the dollars can be staggering. And so tax is an area, and that's a big way that when I entered the beauty industry a long time ago, I mean, tax was sort of my shingle that I hung up in terms of really feeling like an expert. So anyway, this ain't about me. This is about you providing good information to people. And tax is really, really misunderstood. Anyway, keep going, Nick. You're going to say something.
Yeah, good. No, I'm with you 100%. I think Fidelity a couple of years ago put out a one-page ad in a magazine, and they said, and the big thing was, tax season is 365 days a year. Everyone thinks tax season, April 15th, March 15th, or when I pay my quota was no tax. Tax season is 365 days a year. And I think if you kind of change your mentality to how and when you're getting taxed, it kind of changes your mindset a little bit. And the other thing is, generally speaking, it's I got my accounting, or I get my accounting done or whatever, and then I go to my tax person and they file my taxes. That's not proactive. That's literally trying to properly record history. That's the opposite of looking forward, budgets, projections, and the best way to look at taxes. 365 days a year, and it's proactive. I think that's a huge change that isn't a traditional approach to the tax world, essentially.
Okay. I'm going to throw just a few other things related to tax, and let's move on to a couple of things that drive both of us crazy.
Okay.
One of my favorite tax quotes, and this really embodies how tax works, is, and this comes from the 1700s in France, and that is, the art of taxation consists of plucking the goose to get the most feathers with the least hissing. That really is what tax is about. And get used to tax being a very volatile part of our lives going forward, because there's a lot of movement in the area of tax, especially in a volatile environment. Another thing that I think you've said, Nick, but I'm going to say a little bit more directly, there is a difference between tax avoidance and tax evasion. Tax avoidance is legal. It's supported in Supreme Court. It's supported in all the IRS documentation. Tax avoidance is okay. Tax evasion is not okay, and that is doing something overtly illegal. We want all of you on the call to be really, really good at tax avoidance, but don't evade. That's the big thing here. So, all right, Nick, a couple other things here. So I asked you a question yesterday, and I think you know what the question is, because I had to laugh. I said, Nick, in your experience working in the professional beauty industry, what percentage of, when you take a new client on, or when you're looking at financial statements from a salon for the first time, what percentage of them have them in the right format to allow for benchmarking so that they actually fit into an industry standard? So what percent are in the right format from 0 to 100?
My answer was close to zero.
I would concur with that. So basically what Nick's saying, what Tom's saying, is that there is no consistency in P&L reporting. And I've gotten on that grandstand a couple times, and I won't do my rant today. I will spare you. In 2014, we hired 15 MBA students from UMass Boston to help us do that as an industry, but we don't have it. The spa industry actually has a standardized chart of accounts. This industry doesn't. Now, why is that important? And why should anybody care whether it's in the right format or not? Nick?
Yeah, so good question. And the answer is, what's the difference between being able to use the data versus not use the data? And I'm working with, as I work with people in general, but we look at their information, and it's like, yes, you've got the numbers here. Yes, you've got, at the end of the day, you've got profit, you've got expenses, and you've got net income, right? Or revenue, expenses, profit. But unless it's in a manner or a format that allows us to actually get some business intelligence out of it, they're just numbers. You know what I mean? I do this all day, every day, and I love it. And unless you've got something where I can actually put an actual benchmark that means something against your number doesn't mean anything to your business. And I think it's the kind of reorganization or getting your P&L to have business intelligence that we can actually evaluate, have a conversation around, say, can we do something to improve this? And one of the things I do with the financials that I put together is I use a red, yellow, green system. Very simple. You're either below benchmark red, you're within 10%, you're yellow, or you're green. So I kind of, when we're reviewing P&Ls and they're in the right format and we've got some benchmarks around them that are either yours or industry, but that kind of mingle is management by exception. Let's work on the red to get that to not be red anymore. That kind of stuff.
Yeah, the whole benchmark topic is, you're spot on with this. And one of the things that I notice, if I'm called in to advise, and if I don't have a P&L that's going to allow me to rapidly get caught up to speed, it delays the process. And ultimately, I think the reason to have a P&L and industry format, and a lot of people on this call think they actually do, but they don't, is all about decision making. And I can be that blunt. It's, do you want to make good or bad decisions? And do you want to use an advisor? If an advisor has a P&L that is really all over the place, you can't trust the numbers, you can't trust the decisions. So oftentimes, I'll get involved in the project and I'm like, I can't help you yet. I got to have a good set of numbers. So I might bring in a Nick, I might bring in an April or someone like that. So let's talk about benchmarks for a moment, okay? So people on this call come from a variety of different environments, aligned with different manufacturers, different types of business models, and the whole benchmark topic. Give me your point of view on benchmarks, what they are, how to find them and what to use, the relevance of them and all that.
Sure. So I look at it this, and I guess it's I can benefit from the fact that I get to look at a lot of different people's P&Ls from all over the country and in different various sizes, 400,000 in revenue to $7 million in revenue, multi-location, single location, W-2, 1099, all these different things. And at the end of the day, there is a best practice. I don't know if you're using the best practice or not, but as far as benchmarking goes, there's a best practice around what the numbers are, what they should be. Because at the end of the day, this isn't a highly profitable business. If you're doing everything right, the standard for profit is 10%. And if you're messing up somewhere, you can rapidly eat through your what's supposed to be leftover money. So unless there's a best practice around how you're looking at your numbers, and are they not just your numbers, are they the best numbers? I'll so we can all talk about something. Let's just say, hey, Nick, my rent's 15%. Well, good luck making any money because you can't make money in this business at 15%. You need to be, let's just say 6% to 10%. So that's the best practice. So you've got your numbers and we've got what they should be to make sure we're driving the correct overall financial net worth that you're spending all this, time, energy, and money on as an owner of a salon. That's just one example.
Yeah, so you more or less developed your own benchmarks. Maybe you saw some benchmarks from a manufacturer many years ago, but you've adopted them on your own. You feel pretty comfortable with the ones you have?
I think they're the ones that are able to drive the most profit, and they allow us to be able to make some smart business decisions. Yeah, so I'm using real world, what's trending right now, not what does someone say should what they be. This is what collectively they need to be. Otherwise, we're going to be going in the wrong direction potentially. And some people exceed them. I've got a couple of people that they are just absolutely smashing their benchmarks in the month of March. It's like, wow, you're doing great. You're making great business decisions, So.
Yeah, one of the reasons we started 2 to 10 is there was no benchmarks for multi-location. And and a lot of the single location metrics apply, but a lot don't. So, all right, so benchmarks, we understand the importance of that. We talked about government relief. Let's just see what else we got here today. Real estate has been very top of mind for me lately. And the reason why is there's been a lot of great real estate opportunities that have come up, with SBA financing. And oftentimes I get to work with people in their go mode when they're getting out of their business. And I see a whole different level of confidence in owners when they're at that transition point, if they're selling the business and a building, Do you want to speak to that for a moment? And I know that we've talked about that in past roundtables about real estate, but your thoughts on this?
I got a couple different thoughts on that. I mean, obviously, you're talking about specifically when someone sells through their business, or you're talking about when they're actively using real estate in their salon business. Which one?
The latter.
Okay.
Let's stay with. Let's assume everybody in this call is more in a grow mode. They want to grow their business, and I
Right.
just mentioned that as an aside, as far as when they get to transition. So just on a regular basis, your points of view on real estate.
Yeah, I mean, well, two things. I'm down here in Florida, and I don't know the rest of the country, but we're in a real estate bubble. I feel like we're in another bubble. I feel like I saw this 10 years ago. Where real estate, it's hard to make money in real estate when you buy high, and I guess you hope to sell higher, right? But I know different parts of the country trend differently. I know from the tax side of the business, you have an opportunity to both create additional wealth in appreciated property while growing the net worth of your salon, or sometimes they can offset each other. If you've got some prior losses, being able to create some equity and tax savings currently in your business can be huge. I mean, I've worked with some salons, and we've been able to create substantial tax savings on their 1040 tax return, specifically because of real estate transactions. It also gives you more flexibility on rent. Obviously, you're charging yourself rent. So that's a little bit more, something with a better, you can't get in trouble when you are the landlord and the tenant, essentially. So, and it also from a transition standpoint, whether you don't sell, some people are like, hey, I'd like to sell the business, but I'd like to keep the real estate portfolio or the building, and it has part of my retirement funds. That's definitely a big advised position, I guess.
Okay, answer this one question from Sandra, and then we're going to move on to the rest of our agenda today. Nick, you're doing great. Thank you for the information. We got a question from Sandra. See if you can give us a quick answer to this. When you were saying 6% rent, is that base rent or common area fees, taxes, and things included in rent?
That's everything. So I'm not talking triple net, double net. That's like when I have to cut a check to my landlord, I owe them. What do I owe them to month to month?
And we refer to that as gross rent.
Yeah, gross, exactly. Your gross rent. And so what's the difference between 6 and 10 as an example? Well, 10 would be I am paying more rent for the benefit of more foot traffic. If I'm in a higher, that's going to just give me more walk-in traffic. Yeah, I'll pay some money in rent for that, so I have an opportunity to grow my business. But if you're in a low retail or walk-in traffic area, why are you paying more money in rent?
Yeah, I'm with Sam Mercado. I like to call it occupancy. And then under occupancy, you have all the elements of rent, utilities, et cetera. Nick, you did great today. Thank you.
Awesome. Absolutely. Thanks.
I'd like to personally award you the $1 million light bulb, which allows you to enter the Wall of Fame of our Brain Trust. So
all right.
Today, we have a tough act to follow with Robert last week. Good morning, Robert, by the way. But you know what? Great information. Your colleague, April, out in Nebraska, you're in Florida. We're all on the same page with a lot of the advice that you give, but you have a nice way of making it approachable and explainable. We do have some people that want some of your contact information, so we'll help you with that. So let's give Nick a virtual round of applause. Thanks, Nick.
Thank you. I appreciate it.
We'll have you back. All right.
All right. Thanks, Tom. Thanks, Michelle.
Right. Let's see what else we got today, guys. All right. Yes, I don't believe we've acknowledged our sponsors yet. Aura and Vish. Thank you, Aura and Vish. I don't know who is on today from either company, but again, they did such a great job in terms of providing education as it relates to technology and hair color. So great. Past recordings are in a plan for profit portal. Michelle has a few different things that she wants to share that comes from a beauty industry report. So I am going to turn myself on. Let me see. We don't need the screen. So, all right, Michelle, take it away.
Good morning, everyone. We just did an Instagram Live with Vish, CEO Joshua Howard, that was really incredible, talking about the technology that they're using and some different ideas for cost savings and waste reduction. So check out our Instagram if you want to see that. The Beauty Industry Report by Jane Morehouse has a lot of great information. A few things, a few nuggets that we gathered from it. They've got a watch list. Global market research company Euromonitor International reveals the trends that will define consumer behavior and influence business strategies this year in top 10 global consumer trends. So their top 10 are: expect purpose-driven initiatives that support the bottom line, people, planet, and profits. Number 2, desire the ease of on-the-go impulse and spontaneous occasions and simplicities of pre-pandemic life. 3, reconnecting with nature and turning to open-air venues. 4, using digital tools to stay connected. 5, gaining newfound flexibility, scheduling activities in a non-conventional order. I think everybody's time has changed, and so those popular times in the salon that we used to be able to really plan on, I think everybody has seen change quite a bit. 5, distrust of media and governments, defying misinformation and putting their needs first. 6, demanding contactless services, exceptional sanitation standards and products that enhance hygiene and immunity. 7, reassessing priorities and identities in pursuit of a more fulfilled life and improved mental resilience. 9 was budget cautiously and purchase value-added and affordable products and services. And 10, finding a new work-life balance as remote collaboration redefines the traditional office environment. I said 2021 will be a pivotal year. Tailoring strategies to these emerging consumer trends will empower businesses to endure the unexpected and overcome adversities. No surprise to anyone, 50% more retailers plan to revamp fulfillment strategies to address consumer needs by Blue Yonder Retail Executive Survey. They talked a lot about how shopping online was on the rise before COVID, but it definitely grew because of COVID, and the convenience has become addictive and most people won't go back. Really do a deep dive into your e-commerce platform and diving into how your e-commerce platform can drive the rest of your business. Once you launch your e-commerce platform, it becomes the driving factor behind all of your sales and marketing initiatives. Talks about consider the factors when deciding to transition your website to an e-commerce platform. Make sure you have enough time, investment, and resources. It talks about the 4 steps: integration, content, engagement, and promotion. Some really valuable things there. And then when it gets to finance, a couple interesting tidbits. Madison Reed recently announced a $52 million financing round to continue to fuel its omni-channel expansion and build upon the 130% growth it saw in 2020. The company experienced 130% growth in 2020, and its customer base nearly doubled. During the peak of COVID-19 surge, consumers bought the brand's hair color kits every 5 seconds. Something we really need to think about as we're looking at color in the salons. Another large corporation, Regis, reported a second quarter 2021 net loss from operations of $32.9 million. What I thought was interesting from that was the president and CEO says, while the effects of the pandemic are evident in our results, we remain very confident about the strength of our business and our brands. Over the past quarter, we have executed on a number of strategic initiatives, including brand-centric corporate reorganization, the implementation of a zero-based budgeting process, an evolution of our corporate salon refranchising strategy, and the launch of new salon automation functionalities to our proprietary POS. These are designed to transform Regis into a nimble, performance-driven, data-oriented organization. I think there's a lot we can take away from that, huh? That's all I got, Tom.
I'm very, very skeptical about Regis Corporation being a nimble organization. They're in the Twin Cities here, and Regis was the dominant, and I can't even remember how, it was probably back 2008, but they're still relevant. One other transaction that's interesting that I read about is, and by the way, as far as this list goes, Sue Aarons, you had the request, we can send out the beauty industry report. It's put together by Jane Morehouse. She's awesome. Jane will be a guest for us in future weeks. So I think it's a good thing to subscribe to, guys, the beauty industry report. It's once a month. And there is a trickle down to small businesses. A lot of the beauty industry report are bigger brands, but it does give you an alert what's going on. I'll give you one other one. The Dry Bar actually just aligned with a company that's purchasing the franchise rights. So what this means is that Dry Bar is going to move into the franchise model. That was hot off the press too. So anyway, good stuff for us to know that are innovative and want to be a little bit ahead of the curve. Let's see what else we got here. We did have some brain trust shares from before in a previous week that we haven't mentioned. Chris Murphy, we're always asking, what's on people's mind, and he summed it up. Sales may be down, but our balance sheet never looked better. I think that's a common thing. And I'm really noticing it a lot, that balance sheets are improving with this liquidity. Barry Matthews, we work with very closely. He's an analyst. He's a longtime CFO in the beauty industry. Talked about the importance of still looking for concessions, whether it's from landlords and other parties, but you have to ask. Megan Jasper, I don't know if Megan's with us this morning, but for them, restructuring their compensations program has been a huge silver lining. A team has a clear understanding how they're paid and how and now how they can make money. They've also realigned their P&L, working towards a name to every number, and they are cash free as it relates to in the salon. So anyway, some great brain trust shares, some great shares from the beauty industry report. I've got a couple quotes from Churchill. I don't know, love or hate Churchill. I like this one. In finance, everything that is agreeable is unsound, and everything that is sound is disagreeable. Money's a very emotionally charged thing. I also love this one too. I'm going to throw this in. This sounds like something, Sam, you would say. If you're going through hell, keep going. I think we're past going through hell, actually. Let's see what else we got on the screen here before we wrap up. And I do want to acknowledge people are on the call, but let me get through a few announcements. Yeah, a lot of work going on. I'm just seeing a lot of movement in terms of salons bringing in key employees as partners. And one little thing, I was on a call yesterday with a group that's in the process of transitioning their business. They want to do it with key staff, but they don't think any key staff. Biggest fear by the owner was that everybody would be interested in buying the salon or no one would be interested. And they had a lot of assumptions, but don't be surprised if there's people in your business that are more entrepreneurial and have access to funds. You'd be surprised. All right. So again, I want to celebrate. Here's an example of a transaction going on. We celebrated this last week. Amanda, your acquisition of W Daily, great news. Guys, don't forget to hit the chat here. Robert, I think you're still on with us. Again, I've got to listen to the recording of last week. You made me laugh. You didn't make me cry. Other people have made me cry. Anna Pacito made me cry. I mean, I'm a crier anyway. We all know that. But Robert, it was just such a delight to have you last week, and Nick, you too this week. Now, I do have some information and news for you. All right. So after much deliberation, we have decided to start a second roundtable. And this second roundtable is for a different audience. It is for schools. And I've been drafted to do this by several school owners. And as we understand more the student and the school market, it's important that all parts of the salon ecosystem be healthy. When schools are healthy, that means students are healthy, and that means we're all healthy. So anyway, starting on May 12th, which would be the anniversary of starting the other roundtable, we're going to do a 12 o'clock noon school roundtable. If you have an interest in that, please let me know. I've already got a core group that's backing us. When I say back, I don't mean back because we don't need backers for this. I mean back, it means they're going to support it. They're going to be involved. So we already have some conversation starters and members of the Brain Trust assembled. If you're interested in being part of the school roundtable, please let us know. It's going to be a very similar format, and it's going to go through the issues and the opportunities centering on the financial part of the business as it relates to school. So I'm really excited about that. We do have a group starting here with Carrie Perkins, and this is a growth challenge, and it starts April 19th. Carrie was on with us 2 weeks ago, I think, talking about our 17% challenge. And, you know, it's a way to get growth from your team. So you might want to look at that. Otherwise, we've got one-on-one coaches that are here to help you, Carrie, Heath, Jody, and Candace. And now, before we wrap up, guys, who the heck is on the call today? And let's see what's going on in the chat. Maybe next time Robert will make me cry. You probably will, Robert. I love it. All right, so who's with us today? I know we got a lot of the usual suspects. Some people, you just have your phone number in there. Hello, Allison S. Good morning, Amanda. April, so glad you joined us this week. April, we'll have you as a guest too. Ashley, Austin Randolph. Hello, Austin. Bonnie's on. Hello, Bonnie. Nice to see you. Hello, Kathy and Casey and Christine B and Colleen and Connie. Good morning, Darren from Finley's in Texas. I hope you're doing well. Hello, Holly, Jan, Joe, and Karen Deanda. Karen and Joe Deanda. Hello, Deandas out in Colorado. JP from our team. Good morning, Carla out in California, and Kelly. Kelly, I'm not sure where you're at, what state, but I'll find out. Kip, good morning. Hope things are well in Tennessee. Linnell, Lisa J, Linnell Lynch. Good morning, Linnell Lynch. I hope I find you well today. Melanie, Melissa, Nina, Orlando. Hello, Orlando. Hope you're doing well. Rebecca, Robert, Salvador joined us. Hello, Salvador. How are you? Sam, good morning. Love you, my friend. Sandra, and we've got Shara, Sue Aarons. Good morning, Sue Aarons, and Terry McKee. Trent, hello, Trent, and Zahir. So good group today, as usual. I love watching Tom crack up with Robert last week. Laughter warms my heart. Yes, that is true. All right, laughter is a good thing. Robert, I'm going to have you come back on. Nick, we're going to have you come back on and have you join our repeat recipients of a $1 million light bulb. So we're going to see how many people gather this year. Michelle, I got 55 minutes after the hour. Do we have any housekeeping? We're on next week, right? As usual, we don't have a guest. We usually find our guest the day before, and I'm pretty unapologetic about that because it has worked. So guys, have a great week. We appreciate your insights. And Nick, thanks again. And thanks for all of you for spending time with us this morning. Take care. Bye.